One single company now commands over 8% of the entire S&P 500 index. Let that profound statement sink in for a moment. This has never, ever happened before in the history of modern finance. This is not merely a financial headline. It is a declaration of a new world order, written in the language of stock tickers and market caps. A single corporation now holds more weight, more influence, and more raw power over the world's most important stock market index than any company that has ever come before it. We are talking, of course, about Nvidia Corporation. And this isn't just another story about a successful company hitting a new high. This is the chronicle of a monumental shift in the global economic landscape, a concentration of power so immense, so rapid, it raises profound and frankly, deeply unsettling questions. Today, we're not just going to look at the stock ticker, we are going to dissect the very fabric of this phenomenon. We will explore how this happened, what it truly means for the market when one company becomes this dominant, and ask the question on every investor's, economist's, and policymaker's mind. Is this the glorious pinnacle of a new technological revolution, or the terrifying, vertiginous peak of a bubble that could take the entire global market down with it? In this essential deep dive, we will explore: how did Nvidia achieve a mind-bending $4.47 trillion valuation, soaring past legendary giants like Microsoft and Apple as if they were standing still? What are the profound systemic risks when the health of the S&P 500, a benchmark for the entire US economy and a cornerstone of millions of retirement plans, becomes so heavily dependent on the fate of one single entity? And we'll compare its meteoric rise to the rest of the market to understand if this is truly sustainable growth or a dangerous, beautiful outlier flashing a massive warning sign for us all. Stick around because the details are not just interesting, they are absolutely astounding and critical to understand. Let's begin with the raw, jaw-dropping numbers that set the stage for this entire paradigm shift. As of the closing bell on Tuesday, Nvidia Corporation's market capitalization officially topped $4.47 trillion. To truly grasp the scale of that figure, let's put it in context. A trillion is a million, a number so vast our brains struggle to process its reality. That valuation of $4.47 trillion makes Nvidia, as a single company, more valuable than the entire annual economic output, the gross domestic product, of nations like the United Kingdom, France, and India. It is worth more than the GDP of Germany, the manufacturing powerhouse of Europe. This isn't just wealth, it's economic sovereignty. This colossal valuation was reached as its share price ticked up by a mere 0.52% to close at $183.10 apiece. A seemingly small daily move, but one that had historic consequences. Because on that same day, the S&P 500 index, the broadest measure of the American stock market, closed at its own record high of 6,445.76. The total value of all 500 companies in that index reached an incredible $53.66 trillion. And here is the crucial history-making point. Of that immense $53 trillion pie, Nvidia now accounts for over 8% of the entire thing. This is the highest weighting ever recorded for a single stock in the index's history. Think of the titans of the past: General Electric in its heyday, the symbol of American industrial might; ExxonMobil at the peak of oil prices, controlling the world's most vital resource; international business machines when computers were first taking over the world; even Apple and Microsoft at their most dominant moments. None of them ever held this much concentrated sway over the S&P 500. Nvidia has not just broken the mold, it has shattered it into 1,000 pieces. But these astronomical numbers don't just materialize from thin air. They are the market's reaction to a technological earthquake, and Nvidia is standing directly on the epicenter. So what is the secret sauce? What is the engine behind this unprecedented ascent? The answer can be summed up in 2 letters: AI. For years, Nvidia was a company known primarily by a niche community of computer gamers for making powerful graphics processing units, or GPUs. These were the specialized chips that rendered stunning, realistic visuals in video games. But a revolutionary discovery was made. The very architecture that makes GPUs brilliant at processing millions of pixels simultaneously for graphics also makes them the undisputed champions at handling the complex, parallel calculations required for artificial intelligence. Imagine you have a single, very smart person. That's a traditional CPU. If you give them 1,000 forms to sign, they'll do it one by one, very efficiently. Now imagine you have 1,000 hands with pens. That's a GPU. They can sign all 1,000 forms at the same time. This parallel processing capability is the lifeblood of modern AI. And in the last few years, the world has woken up to the transformative power of AI. From generative art and chatbots to drug discovery, autonomous driving, and complex financial modeling, every industry on the planet is in a frantic existential race to build and deploy AI applications. And what is the one thing they all need? The one critical piece of hardware, the shovels and pickaxes of this digital gold rush? Nvidia's GPUs. The company is experiencing what the report calls an insatiable demand for its products. Every tech giant, every nimble startup, every established corporation trying to stay relevant is a prospector, and they are all lining up to buy their tools from one single dominant supplier, Nvidia. This has given the company unprecedented pricing power and a growth trajectory that leaves everything else in the dust. The stock has rallied 7% in the past month alone, a staggering 41% over just 3 months, and an incredible 58% over the past year. This isn't just growth, it's an economic explosion. This explosive ascent has completely redrawn the map of the corporate world, leading to a stunning changing of the guard at the very top. For the better part of 2 decades, the conversation about the world's most valuable company has revolved around 2 titans, Microsoft and Apple. They were the kings, the undisputed behemoths of technology and finance. The era of the personal computer operating system gave way to the era of the mobile ecosystem. Now, we have officially entered the era of the AI engine, and Nvidia is its prime architect. Nvidia's $4.47 trillion market cap has left both former kings in its rearview mirror. Microsoft, a giant in its own right with a market cap of $3.93 trillion, now sits in the number 2 spot by index weight. Apple Incorporated, the company that defined the smartphone era and was the first to hit $1, $2, and $3 trillion valuations, is now a relatively distant third at $3.41 trillion. Let's pause on that. Apple, one of the most successful and profitable companies in human history, is now more than a full $1 trillion less valuable than Nvidia. Rounding out this Mount Olympus of corporations are Alphabet, the parent company of Google, at $2.46 trillion, and Amazon at $2.36 trillion. The fact that a company can be worth nearly $2.5 trillion and still be considered a distant 4th place speaks volumes about the sheer scale of Nvidia's dominance. It has not just joined the club of the world's most elite companies, it has fundamentally redefined what it means to be at the top. It's a seismic shift in the corporate world, a story unfolding in real time. If you're finding this breakdown as fascinating as I do, take a moment to hit that like button. It really helps us bring more deep dives like this to you. This reshuffling is about more than just bragging rights. It signals a new technological era where the computational power behind artificial intelligence is now valued more highly by investors than the software that runs our computers or the devices we hold in our hands. However, this incredible concentration of value into a single company and a single sector raises serious, uncomfortable questions about the health and stability of the entire market. The technology sector now represents a colossal 34% of the S&P 500's total weight. That means over a third of the value of America's 500 largest companies is tied up in tech. Following far behind are financials at 13.8% and consumer discretionary at 10.4%. When one sector becomes this heavy, it starts to wag the dog. A good day for tech, and particularly a good day for Nvidia, can pull the entire market up, creating the illusion of a broad, healthy rally. But the reverse is also terrifyingly true. A bad day for Nvidia now has an outsized, amplified negative effect on the entire index, and by extension, on millions of people's retirement accounts, pension funds, and investment portfolios. Millions of people who own a simple S&P 500 index fund, believing they hold a safe, diversified basket of the American economy, now find that over 8 cents of every dollar is tied to the fortunes of a single volatile tech stock. This creates immense systemic risk. To see this disparity in sharp relief, we only need to look at another index, the S&P 400. This index tracks mid-sized companies, which in many ways represent a more grounded view of the broader US economy, away from the mega-cap tech stratosphere. How have they fared? The S&P 400 posted what the report calls more modest gains. It was up 3% in 1 month, 9.5% in 3 months, and has delivered 19% returns over the past year. In any normal environment, a 19% annual return would be considered fantastic, but it is dwarfed by Nvidia's 58% surge. This growing chasm shows that the market's record highs are not being driven by a broad-based economic boom, but rather by the phenomenal performance of a tiny handful of stocks, with one stock leading the charge far ahead of the pack. Is the stock market still a diversified reflection of the economy, or is it becoming a high-stakes, leveraged bet on the continued success of a single chipmaker? This unprecedented situation inevitably invites comparisons to previous market manias and bubbles. Is Nvidia the Cisco systems of the dot-com era? Back in the late 90s, Cisco was the essential provider of the networking gear that was building the internet. Its valuation soared to astronomical heights, briefly making it the most valuable company in the world on the promise of infinite growth. The narrative was that the internet was limitless, and therefore Cisco's growth would be too. We all know how that story ended. When the bubble burst, Cisco's stock plummeted over 80%, and it has never come close to reclaiming those highs. The parallels are certainly there. A company providing critical infrastructure for a revolutionary new technology, a parabolic stock chart, and a fervent belief that this time it's different. However, the argument for why Nvidia might be different is also compellingly strong. Unlike many of the dot-com darlings that were built on hype and promises of future profits, Nvidia is a cash-generating machine right now. Its dominance is real, its products are tangible, and the insatiable demand is backed by tens of billions of dollars in real capital expenditures from every major corporation on Earth. This isn't just speculation about future potential. It's a reflection of immense current profitability and a commanding, near-monopolistic market position. Furthermore, Nvidia has a powerful moat in its CUDA software platform, a programming environment that locks developers into its ecosystem. The AI revolution is arguably a more fundamental shift than the initial build-out of the internet. The question is not whether the AI revolution is real, it clearly is. The question is whether any company, no matter how dominant, can justify a $4.47 trillion valuation and sustain the kind of growth that has led it to this point. History teaches us that market gravity is a powerful and undefeated force, and no tree, no matter how strong, grows to the sky. So as we stand here today, we are witnessing financial history. Nvidia has cemented its place as the undisputed king of the stock market, a titan whose influence now eclipses all others. Its journey has been fueled by a genuine technological revolution, one that is reshaping our world. But its very success has created a new, more fragile landscape fraught with potential risk, where the fate of the entire market is more intertwined with the fortunes of a single company than ever before. This is not the end of the story. It is simply the end of a chapter. What happens next, whether Nvidia can continue its reign, whether competitors can possibly catch up, and whether the market can handle this level of extreme concentration, will be one of the most defining economic narratives of our time. The story of Nvidia is more than just a stock market report.
It's a chapter in the history of technology, global economics, and even geopolitics being written in real time. This is no longer just about shareholder value. It's about technological sovereignty and the future of global power. What happens next will affect us all. To make sure you don't miss our next analysis on the tech giants shaping our world, hit that subscribe button and turn on notifications. You won't want to miss what's coming.